Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Chelsea Oliver. Welcome to today's morning call. We have mixed markets around the world today as we await for the Fed statements today and the BOJ tomorrow. Asia is slightly off while Europe has small positive arrows. It looks like areas are kind of taking this earnings season in stride.
Yes, at this point there's been lots of earnings that probably have been more disappointing, but overseas is still trending higher, but that could all change based on what the Fed says today and what the BOJ says tomorrow. So a lot of people are saying, is this the quiet before the storm? At this point we don't really know too much, except for on a technical basis lots of more constructive things are happening versus faulty, at least overseas for now. You look right here, the chart of the EWG, we talked about this downtrend that got broken, and that happened way back here, and then the fact that the EWG took back the 200-day and then pulled back and held it. So at this point, the DAX, which is Germany, is being pretty, is acting pretty well, which is usually a proxy for that region. So until this trend gets broken, to the downside, you're seeing a few tailwinds out of Europe, even with all the problems in Europe, and I mean in Italy and even Greece. I've heard Greece in the headlines, but no one's really going nuts with that. So here is support one, the 200, the 200-day and the 21-day. So this area has to hold. If this doesn't, then perhaps maybe a little bit more noise comes out of Europe. As far as Asia, I think the Nikkei was only down 0.3%, and the Shanghai was only down 0.3%. Overall, this is still a laggard sector. Look at it; it's below the 200-day. I would watch here. I don't think you're going to hear much talk about China unless this trend gets broken to the downside. And if this trend gets broken to the downside, perhaps that'll start having a headwind type effect on our futures early on. So at this point, still kind of, below resistance, but, hanging on here to this trend off the lows.
S&P futures are down 5 to 6 handles, but the NASDAQ is down 60 handles as tech earnings continue to disappoint. Do you think that we can hang in there with, key names keep filling up this penalty box that we have?
Right. In the spirit of hockey season, it's like when you have great players in the penalty box, it gives the other team a power play. And at this point, it feels like the Bears have had a power play, for the past week or so, but they failed to score. You look at the chart of the S&P, and you'll see that you have this upper resistance, right? Here's the upper resistance, which we're getting really close to. This is another spot that we pretty much tagged. But overall, this is all that the Bears could muster up. This is your 21-day moving average, and we've been above this 21-day moving average pretty much for multiple months, and that was after the double bottom here. So if we take a closer look here, we have the Fed today. Maybe the market's waiting to break, after the Fed to see what they say, etc. So at this point, this is the low. This is 2077. As long as we stay above the 21-day in this 2077, you really can't get too bearish. Maybe bearish on individual names I miss on earnings, but not bearish on the S&P. So here's our spot. So this spot was a very similar spot to here. This is when everyone was saying we're going to break the ascending channel. I was actually kind of bearish here too until this day happened. And then look what happened next. So let's see what happens here. And then you also have a bit of a wedge in the indices. So you could put 2096 as resistance and 2077 as support to see which way we resolve. And like Chelsea said, the Qs have been an area of weakness, which we'll get into the names that are in that penalty box. But ultimately, this ascending channel broke to the right side, and now we're breaking below key support. So the question is, will the Qs stay below this 108.12, or will it open lower and reclaim it? You have the 200-day right here with another moving average, and that 200-day is closer to 107.46. If we close below 107.46, it's going to be hard for the market to ignore this weakness in tech, even though we're getting some flows in other spots.
Oil is up today, which is helping sentiment a little bit. Do you think that oil can get to 50 and the XLE to 70?
Well, that's the new conversation. It feels like every few weeks the conversation around oil changed. First, when it was at 30, is it going to break 30 and go to 20? And then when it got back above 30, is it going to hold 30 and get to 40? And now that it's around 45, can it hold 40 and get to 50? So, each way there's different ways to trade it. At 45, it seems like it could get, gravitate towards 50. It's been trending well. remember that whole Doho crazy weekend obsession? Well, that was a signal that oil is going to go higher when it actually didn't go down there and went up. If you look here at the USO, the trend has been to the upside. You look how far this has come down, so it's still just in bounce mode, not even at the 200-day for the USO, but you also have to take in Nikkei there. So it seems as if there is a bit more room. So it's been going sideways. It looks like it's going to clear this spot. So as long as the USO stays above 1093, you can get another move. And the 200-day here in the USO is closer to 1276. And if you go to the XLE, which has been a rock star as of the last few months, with lots of spots to to kind of take advantage of, especially if you weren't caught in this. Look where this is from. This came from. You have, again, the 200-day was broken right here, and that's around 92, and that was after this head and shoulders top. And then remember this support that broke, that got retested right here. Well, now we're above the 200-day pretty comfortably for the first time in over a year. So it does seem as if it wants to continue going, you could see a move closer to the 72. And if you use on a short-term level, the 21 day is your guide. Basically, the XLE has been above the 21 day or somewhat above it ever since taking back, this 58. And I remember, when we listed this wedge type pattern, and here you had it kind of again with the gap up right here into the Doho right there. And now if you're very, very short term, you could use this as your stop, which is 65.79, but it seems like the next big area doesn't happen until north of 70.
Banks have tight upper flag setups and sometimes get more movement if the Fed gets hawkish. What banks are you long now, and what needs to happen for you to add to them?
Well, I'm hoping that they get a little bit of a move before the statements come out, after 2 o'clock or around 2 o'clock, because they have a nice setup. Ever since earnings, JP Morgan earnings, the market or that sector ignited from a lower level. Yeah, so I know it was a lowered bar, but for guys not trapped, it was a good trade. And I'm thinking maybe there's like one more push either before or maybe after. So in my note I wrote, if this holds, then maybe you can get over that. That's my whole big sophisticated, program for the bank. So I'll show you. I'm not in Goldman, but let me give you just a strategy here too. Here was support, okay? Remember after earnings, JP Morgan, it gapped up. This is when we got long it, and then this was your next buyable strategy above here. So right now the way I term it is if this can hold, which is yesterday's low, 164.22, perhaps it takes out this 4-day range and makes its way towards 170. What I'm in is Morgan Stanley because I felt like it might be easier to navigate even though it's a laggard. This took out this resistance, and now you have a really nice tight inside range. So same strategy here. I said if this could hold, what is this? Just say if this could hold 27.15, and the Fed's a little bit more hawkish, maybe you can get above 27.88 and has room all the way to the 200-day at 30.09. Citigroup, I don't have to go through all of them, same kind of thing. This actually is acting better. I'm in some Citigroup. I'm thinking maybe, it tries to tag the 200-day, nice upper flag. This had some power above this prior resistance. So, the banks are tight and might continue up. But again, look at the size of the move. So that's why my upper stops will be key. If it breaks below this, I'll be out. If it holds in there and the market wants to ignore technology and rotate into the banks, maybe I'll add to it. And we'll see what happens today.
Like I mentioned before, there are a lot of key stock names in the penalty box, but it's good that we have tactics to deal with this type of situation. Could you give us a look at how we could have made money with Google and Netflix in the short side?
Yeah. Yesterday on Twitter I posted, you got to know your post-earnings low to maybe get the H sell setup, meaning you come down hard after earnings, you have a big hole in your chart, usually means that there's damage there. If that hole doesn't get filled, maybe a continuation to the downside. And if you look at Netflix, it's a great example. So if you look at Netflix, you do have this broken ascending channel, which I put also on there. Then you had your earnings gap resistance. Never even got back up to here. You had a small red dog reversal on this day that got negated the next. So some people might have shorted right here, saying, okay, here's your reflex bounce off of your big move lower. And if you didn't, then your next spot to do it was when it got back below the post-earnings pivot and then maybe even below that. So that was a nice sell setup. So this looks like an H, right? Here's your pull down, lowercase h comes back up, you short some resistance, then you add as it goes lower. So now for today, you'll see whether or not this could hold, which is 91.25, your new pivot. And I said, use Netflix pattern to give you cash flow on Google. Same similar setup, right? You have disappointing earnings, you have a hole in the chart, okay? Had one positive day after it, and then took out this spot. Okay, it actually started higher yesterday, so you could have shorted it in the green, then it went red, or you could have shorted it went below the prior low here, which was 735, or you could have waited till here, which was 730, and it went all the way as low as 720.32. So now, here is yesterday's pivot. See what happens. See if it's below with detect weakness, and then really, the key is going to be this 200-day, which is closer to 701. I think there's an EMA around 717. So, that's how you have a setup for cash flow. Gap down, a little bit of a rally back, creating the H, so you could short some resistance if that's what you wanted to do, or when it took out this low, and that was that. And real quickly, Amazon has not reported yet. I have a feeling it's going to be vulnerable today because people are like, we're getting all these bad earnings all across the board. Why will Amazon be any different? So, for today, this is your pivot around 611. If it breaks below 611, this was the last time we played it for a breakout, which is a little bit closer to 601. And here is that, support zone. So, prior to tomorrow, if the tech doesn't bounce, chances are I think, you might get a little vulnerability down, towards this spot. But again, shorts are going to be a little bit scared because it still has to report, and for some reason Amazon, there's always a little optimism about its report. But here is your inside, area there.
Apple is a big disappointment overnight as analysts keep lowering expectations, but not enough. It's down 8% and you're flatted. Will you be looking for opportunities there?
I'm going to look at it today because I'm not in it, I'm not caught. I actually traded the trend pretty well when, a few weeks back before they actually started ratcheting down iPhones. Remember that Friday I was long and it got stopped out when they lost to 200-day and the 8-day? Well, that was a good spot to get out of the way prior to every analyst lowering, estimates, and revenues, but it wasn't enough. It actually was even lower than that. Just a real quick note, remember in a lot of the recaps, I'm like, I have the iPhone 6, a lot of people have the 6 Plus. Who's going to go from a 6 or 6 Plus to a smaller phone? No one. And the 6 and 6 Plus was so good, who's going to need an upgrade, and maybe even in the 7. And the only people who looking for phones are those with the cracked 5s that never got the 6. So anyway, they're almost like a victim of their own success. So the numbers and the comps are not going to be good for a while. So the question is, stock action, because that's all you have to lean your hat on now. You look here at the chart, and you'll see this was when I got stopped out of Apple well before they started bringing down the numbers. Right on this day, boom! It was a nice trend that ended. So the question was, would this move lower be enough? And obviously, they missed even more than analysts thought. So it's even down further. So here is a spot. This spot, is closer to 97.50, which is already below. So, with that being said, the only thing you really know underneath it, on a micro version is somewhere around, what is this? This is, 93. This is 92.50. This is 92. So between 92 and 93, if we see that today, I'm most likely going to be looking to see if I could, be a buyer there. Here, I will only look at a 5 or 15-minute low to trade against. But then ultimately, if you look at the macro chart of Apple, and no one really has talked about it in a while because it acted well, in the start of the year. You still have, this left shoulder. This could be considered, a head, right? And then this still, could be a right shoulder with a major neckline going across here, which, this pivot here is 92. So you got to be, real careful that if it does break below this 92 and stays below it, you could have a heck of a move down, okay, into the 80s. And if you look here also, this downtrend really never got taken out either. So that's where, this reflex bounce got rejected. So now we'll see if this could hold or this could hold, and, this is a pretty, ominous looking pattern if it winds up, working itself out. So you got to be careful, with Apple, and a lot of people have blindly bought Apple in the past decade or two and did really well. So sometimes things change, and I'm not saying this is a BlackBerry, right, but short term, be careful even if you avoided this mess.
Right, and while we're on this name, what about IBM and Microsoft? Do you see opportunities there?
Well, they both already reported. IBM actually acted decent after it had the big hole in its chart. So I'll show you the difference between IBM and Microsoft. IBM, first of all, actually, since we have the long-term chart up, you could probably draw this line here where, it's still, got kind of rejected there, but holding higher. So you go to the daily chart. IBM actually was one of the few stocks that were put in the penalty box that actually didn't fall apart. And if you use the post-earnings low here, you had an opportunity, one here, or if you waited to see if it got into the earnings gap, it did it, and now it's holding it. So at this point, IBM is looking a little bit more favorable than some of the others. So maybe if you're long IBM, be long versus 147. If it gets above this, your next spot's 152. Microsoft, more on the weak side. Microsoft, got put in the penalty box also. You look at the macro pattern here. This was priced for a beat and a solid report, and it didn't happen because it was close to 52-week high. So now, again, another big hole in the chart. So the question is, does real damage set in? And real damage will set in if it doesn't hold this 200-day like it held it here. So this is your pivot right there at 50.77, a break and close below this. You're going to have some people leaning on this for some more downside, and then your next level below comes in at 48. So we'll see if the Apple weakness also bleeds into Microsoft that already has a huge hole in its chart.
Twitter also came out last night with disappointing revenues and guidance. I know that there's a lot of pressure right now. What are your thoughts here? I know options are probably worthless at this point, but it's better than being trapped in the stock.
Yes.
Do you have advice?
Well, being trapped, I rarely ever take stock into earnings, because it's a coin flip. You never really know. You could have a slight bias, and that's why sometimes I go with options. And for Twitter, I always feel like I'm missing something, and the stock's been so horrendous, I haven't missed a thing. So I've had calls from 3 weeks ago when there was all these, NFL and takeover rumors, et cetera, and just so happens I still had them, for earnings. So I was hoping, hey, maybe I get lucky that sentiment's so poor and they actually deliver, but it didn't happen, so my options are a donut. But it's fine. I knew what I was risking when I did it versus just buying the stock, hoping, and then it being down, $2.50 or a big percentage. So anyway, you look at Twitter, and it's actually kind of sad, considering we all use it. I love it. I have a great community around the world. I love interacting with friends in China, in Europe, in the Ukraine, and wherever it is. And unfortunately, they have not been able to monetize it. So this downtrend has been pretty significant. So the question, I guess, now is, does it hold above the recent 52-week low, which, if you look here at the chart, this is one spot. So we'll see what is this spot. This spot is 1540, which I think it's around, and then you had that washout low here. But remember, stock was getting crushed ahead of that washout low. Here was a little off the low, so it didn't price in such a horrendous report. There was actually a tiny bit of optimism, it looks like. So anyway, support 1, support 2. I'm probably not going to do much with it. I'm going to wait, and I'll be just fine with my options going worthless. And as far as Facebook, this is the best in breed. This is where everyone's being hopeful. You can save technology. I know yesterday I actually had a good short. The moving averages were curling down. Me and Chris, we shorted below 110 and below 109. I covered just in case, which I probably should have kept it. Unfortunately, I did not. Here is support 1, which is 106.52. And here is a 200-day, which a lot of stocks have been coming into. So if it's disappointing today, they miss and expenses are high, et cetera, it could see this, 101. But, there's also shorts are a little on the back end that if they deliver like last quarter and they keep delivering, then this high here will be the spot that, we'll see if it can get above and stay above. So here's like minor support, big support, minor resistance, big resistance, and we'll approach this whole thing probably later in the session on the radio to talk about a strategy. But right now I don't have any Facebook.
What about LinkedIn? Do you see any pressure there?
Someone said to me, like, water gun to head, what would you do? With this, I think maybe I would go with calls versus puts. Stock's been annihilated from 280 down to, the 118s. Maybe this base is enough, for it to actually have some buyers in it to fill a portion of this gap. So, I'm probably not going to do anything into the report. The report's Thursday. Look where it was. So down here, I would think if you're looking to do something with it, maybe because sentiment's so poor, you could buy like the 130 calls, and if it happens to not be horrendous, you can get a move to 140-ish, considering this is where it was. It was at 160 and it lived above this 180 for quite some time. So anyway, if I had to do something, just because I guess in my nature, I would buy calls here versus puts considering it's come down so much. But sometimes you don't have to do anything. You could trade it after hours or just avoid it and wait for the next day.
Tesla earnings are next week, and the high beta tech name still looks tight and constructive. Will you be looking here for a potential breakout?
Now, I got back long a little Tesla yesterday, so I'm hoping that it hangs in there, goes green, and could be one of the few with still constructive patterns. But it's hard. It's like the lone high beta tech name on the ice fighting all the bears, who have a power play. Could it win? Who knows? Maybe we got to call Pat LaFontaine, if you're an Islander fan, who that is from back in the day. Or Nystrom, or Gillies. I'm dating myself. Anyway, you look at the chart of Tesla, and you'll see it's pretty close, to the all-time highs. Okay, this was the all-time highs. Here was your V bottom. Came off very fast, and now it's holding above this, which I think is pretty constructive. So if you take a closer look here, which is the way I usually look at these things, I would think it needs to hold above this 245 if you're loose, to potentially give you the chance to take out this 258 in order to get back at highs. I don't know if it's going to need news or what the story is or earnings, but at this point I was in some just in case futures were up. I thought maybe I'd have something here, but at this point I'm probably going to just use this 249 as my stop. If it breaks and closes below 249, I'm out. If it holds in there, maybe I add when it goes green, and if it starts taking this out with volume, I think we got a good one here.
Metals still live in this upper range, but we might see more action after statements from the Fed this afternoon. Can we take a look at some key levels in the GLD, and might as well look at the GDX while we're on it?
Might as well, we're on it. And the metals have been very random, erratic from day to day. Traders trying to handicap it overnight are not having success. A week ago I went out and bought a month long calls, so this way I don't have to worry about the day to day just in case it did continue above 120 in the GLD. And at this point, I still think the jury's out. You had a really nice move from here, okay, and then when it took back the 200-day, and since then it's been in this 2-month range. Lots of people turned bullish in here. Maybe they had to kind of wear them out. So I think at some point, maybe it takes out this 122, but it's going to have to take out this 120 to do so. I'm in calls. I'm going to sit in. But if you're trading it actively, if all of a sudden today after the Fed, it starts to break below 117.28, you better be careful that this is support. If for some reason it starts getting above this spot, maybe it gets a pop back towards 120. But I'm not going to trade it. I'm just going to sit in my options. I have the 120 calls, I think, for the last week of May. So if it's going to go, it probably happens within then. If it breaks down, it'll be a zero. But my risk again is premium paid. As that's what I do with options.
Right. And any other closing thoughts ahead of today?
It's a tough spot because, we have 6, 7, 8, 9 of these old school generals and some leaders and some big name companies all, giving bad earnings reports and acting poorly on them. They're not, getting passes. So when you have all the generals in the penalty box, there's not many bulls to fight the war. So, but you have the S&P still hanging in there because you have some flows in the small caps, in the banks, in the energy sector, so it's holding it in there. So that's why I'm saying don't just short the S&P because, there's weakness in Apple. It's kind of putting it just in Apple. So until we break that upper area, which I showed you in the S&P, that 277, let's look at it one more time before we end. Until this spot here gets broken, okay, this upper or tactical bull trend is still intact right in front of resistance. If we were to break below this, after the Fed, risk down and maybe even get short for a move back down to this 240 area. So we shall see who wins at this point. Just be very, very stock specific. And if you happen to be in something, have a reason, either long or short.
Great. Thank you, Scott. Have a great trading day, everyone.